Hi everyone, my name is Grace Cisna. I'm the CPA on staff with ProjectionHub, and today I want to walk you through our e-commerce template with the Advanced Inventory Modeling add-in. So to start, I'm going to begin on the Input Assumptions tab. On this tab, you can enter some key assumptions in the top left, your company name, the company start date, and then you can pick an annual inflation rate for operating expenses. The rest of the items on this tab are balance sheet assumptions. So we've got our investment amounts, fixed assets, and then our loans, as well as our accounts receivable terms. Just a note about this template and every single ProjectionHub Excel template that we sell, anything in this light blue color can be modified by you. There is example data already in the light blue color, and that's just to show you what kind of data we're looking for in each category. The next tab is the Input Revenue tab, and this is based on our e-commerce template. In the upper left, we'll determine the number of website visitors. Beneath website visitors, you'll make an assumption about the number of visitors who are going to make a purchase each month, and there will be an annual growth rate. From there, you'll fill out the data in the product mix box. Note this allows you to enter up to 10 different products, or if you have more than 10 products, 10 product categories. You'll then pick the price or average price for the product or product category and the launch month for each product or product category. From there, the model will update the months along the top here, and you can determine the product mix at each month. Note these months here will be the launch months for each of your 10 products. So you can determine the new product mix each time you launch a product. Once you have that filled out, the model will determine the online consumer sales revenue based on the website visitors, the percentage of those visitors who make a purchase, and then it will use the product mix and the price to determine the online consumer sales revenue in any given month. Beneath the online consumer sales revenue, we have wholesale revenue. If you plan to use wholesale as a method of earning revenue, you can enter the number of retailers you plan to sell to, and you can fill this out for every month. And then the average number of products per retailer per month. From there, the model will use the product mix as shown above to make things easy, and it will calculate your wholesale revenue here for you. After the Input Revenue tab, we have the COGS and Inventory tab. This is where that advanced inventory model comes in. So the only thing you need to fill out is this top box here. So this will show each of your 10 products or product categories. You'll enter the reorder quantity. So this is the minimum quantity that you'll have on hand when you decide it's time to reorder. So when your stock hits, in this case, 50 units for all 10 products, the reorder algorithm will be triggered. And then you'll enter your months of inventory held. So this means that anytime you reorder, you want to reorder about 3 months worth of inventory, again, because we have 3 plugged in for each product. And then since cost of goods sold can change over time based on the amount of product that you order, we've got this table here. So you can enter the order quantity. For example, if the order quantity is 100, then the product 1 costs $10 per unit. If you're ordering 500 items of product 1, the cost per unit in this case is $8.50, and it goes down as the product amount increases. So you can fill out this table based on your data or based on estimates. We also include the price from the Input Revenue tab for your reference. And once this is all filled out, the model below is going to make estimates of when you will need to repurchase each item based on future sales. So for example, product 1 and product 2 are launched already at the beginning. So those are going to be purchased down here. You can see in the purchases line. They're going to be purchased right before your shop starts operating, because those products are sold on the very first month of operations. You'll see that product 3 begins selling in March, therefore it is purchased in February. And this pattern follows along for the whole purchases category. Each time a product is added, it is purchased in the month before. And the amount of the purchase is determined by sales. So the model will determine the next 3 months sales. When you hit that low amount, in this case it's 50, it will add up the next 3 months of sales and see how large of an order you need to make. It will then plug that in. It chooses a nice round number from your model above to make things simple. And then down here, this is in this teal color, is the amounts of inventory, just the number of units. And here is the dollar values of inventory. So it will determine a a purchase price for your cost of goods sold based on the number of units that you purchase. And then this uses a weighted average inventory system. So for cost of goods sold, it's going to average out the dollar value of inventory over the number of units for each individual product. And that's how it's going to determine cost of goods sold. So that is our advanced inventory model. It takes in reordering quantities, and it's obviously going to show more of a sort of up and down pattern of inventory purchases over time, as opposed to our basic inventory model, which is just going to show a flat amount of inventory over time, maybe increasing with the amount of sales. So this one is a little more complex and factors in more products. And these are reorder quantities and months of inventory held. The next tab, which is included in almost all of our ProjectionHub templates, is the operating expenses tab, or we call it the other expenses tab. Note advertising here is not in blue. You can't change the location of that item because it is used on the input revenue tab to determine website visitors. That's at the top here, marketing spend. So while you can change the amount of inventory on the advertising on the other expenses tab, you can't change its location. So that's here. And then you can enter all of your operating expenses here. Note the first 3 months are broken out separately so that you can determine any startup expenses. If you have startup legal, that's just going to happen in month 1 or month 2, you could plug that in here. And the remainder of the model after the first 3 months, you're going to enter the monthly amount, but it's going to use that amount for every month for months 4 through 12 in year 1, and then for every single month for the remaining years. You'll determine it that way, which is just a way to keep it simple and clean, and so you don't have to enter it for every month in the model. We're also going to have you pick a category. You'll see this as a drop-down list. And this is used in our investor dashboard, which I'll show you at the end here. A note about this tab, you can change the way that this expense is calculated. So for example, credit card fees, those fees you're paying to Visa and MasterCard, are going to be determined based on the amount of revenue because a certain percentage of revenue is going to go to the credit card companies. So in this case, it's 2% of total revenue. And you can see that I've selected total revenue. You can also pick one of the other lines of revenue, whether it's online consumer sales or wholesale. If your wholesalers are not using credit cards to purchase, which might be the case, you might just use the online consumer sales revenue rather than total revenue to determine your credit card fees. If the revenue or if the expense is not going to be based off a certain percentage of revenue, you can use this fixed option here, which is right at the top. And then it's just going to be whatever you plug in here. So $100 per month in this case for the software subscriptions. If you do get to your income statement and you see some expenses that appear to be way too large, come back to this tab and check to make sure that all of these are lining up with your expectations. So a lot of times what happens is somebody will have selected a total revenue and then they'll have a 50 here. And that's not showing up as 50% of total revenue. That's going to be 5,000%. So keep in mind, if you want something to be fixed, it needs to be fixed. And if you're going for the percentage of revenue, make sure everything's showing up in the decimal. So this is how 2% should be represented, as 0.02. The next tab is the salaries and dividends input. So this is fairly self-explanatory. You can just enter each job title, their salary, the tax amount if you have employer taxes, any benefits that are getting paid to the employee, their start month, their end month, and the number of employees. So if you have a lot of identical customer service reps, for example, you can just plug in 10, 15, 20, 2 or 3, however many employees you have in this category here. And then we've also added recently an annual raise category. So this will increase the salary each year by 5%. And all you have to do is plug that in and the model will calculate the salaries expense for you. Down here, you're able to enter dividends if you plan to pay those out. You can just manually enter the amount of dividends that you would like to pay in the month in which you'll pay them. We have a cash at the end of month before dividends category here for reference. So you wouldn't want to pay out more dividends than you have in cash on hand. So we've included this for your reference. All right, that's all the input tabs. So now we can move on to the output. One of the output tabs that we have down here is down on the left in orange. That's the company financials at a glance. And this includes helpful charts and ratios and graphs, stuff that can be copied and pasted into your pitch deck. And it's all calculated based on your financials, so you shouldn't have to do anything to this tab here. We've got some ratios in the upper left, and then some nice charts and graphs. Now, I wanted to point out, you may have seen this blue box on a lot of our input tabs, directing you to contact us if you have questions. So I'm the CPA on staff, and if you click on this box and email us and contact us, I'm going to be the one that's reaching out to you exactly. So if you've got questions, or you like the template but you need it to be modified, or you want different charts or graphs, on this at a glance tab, we are able to provide those to you, and you'll be reaching out to me directly. Some of the other output tabs that we have are these summary tabs of 3 different financial statements: the income statement, the balance sheet, and the cash flow statement. And you can see these are sort of customized to the model. Your company name will appear here as you input it on the input assumptions tab. And then the revenue will be pulled from the revenue tab. The cost of goods sold is coming from this COGS and inventory tab. We've got gross margin and just sort of all of those income statement items. We also have a cash flow summary, a balance sheet summary. So for all these summaries, it's going to be showing the yearly amounts, or as of the end of the year for the balance sheet. And then we also have the monthly amounts on the income statement tab, the cash flow tab, and the balance sheet tab. So these are showing every month for 5 years, starting with the first year and then each year below it. And the last tab we have is the Investor Dashboard tab, which is the very first tab in the model. And this Investor Dashboard is a recent development by ProjectionHub. And the purpose of the Investor Dashboard is to allow your investors to play with some of the major assumptions of your model without affecting the data and the rest of the model. If you have questions about this template, feel free to reach out to us at support@projectionhub.com.